Hey everybody, hello, and welcome to the latest edition of Edmonton Real Estate Matters. So, are you a first-time home buyer, and how do you get started? I'm Serge with FindMyHouse.ca and eXp Realty, and I'm here today with Cheetah, a mortgage broker with the Mortgage Group. Hi Cheetah, thanks for joining us today.
Thanks for having me.
Awesome. Now, I often help first-time home buyers find their first home, and they ask me, what is the process of buying a home? And of course, I tell them the first thing they need to do is, save for a down payment, right? So, Cheetah, can you help our first-time home buyers on ways and sources that they can use to put a down payment together?
Yes. So for down payment options, saving up a down payment when you're doing a purchase of an owner-occupied property, it's 5% down. Have a little bit of money for closing costs. But the ways to save is just we have government programs such as a TFSA where you're not paying taxes on the gains. There's a recent one that came out was a first home savings account. That's also tax-free going in, tax-free coming out. And then there's also RSPs. A lot of people have traditionally used that. And there's an ability to withdraw the RSP for first-time home buyers and not have to pay the taxes on that. Oh, and there's also a borrowed down payment, but you have to have very strong credit. It's a very niche product, but strong credit, strong income to qualify.
Mm-hmm. So in, for instance, RSPs, taking money out of your RSPs, how does that program work? How much can they take out, and what do they need to do? Do they need to repay it, or how do they need to repay it?
Yeah, so the government recently upped the amount to $60,000 for first-time home buyers. If there's a couple on the application, so the two each can withdraw up to 60 grand. And yes, there is a repayment period of 15 years to pay it back. So just know that if you're not paying that back into your RSPs, then it's just deducted at your accountant will have to kind of deduct at the taxes.
Okay. One thing we haven't talked about yet, sometimes I run across clients who have parents or grandparents that want to help them purchase a home and literally, in some cases, give them the whole down payment. How does that work?
Correct. So we understand the climate, home prices are up, and now it's common that parents are helping children, or even grandparents, right? So any family member can gift you the down payment. So typically it's got to be, of a familial relationship to be able to gift the down payment and the closing costs. And all it is just a signed gift letter and just showing that the funds have been deposited into the client's account.
And like I said, you said they don't necessarily have to repay it back to them.
Well, yeah, so that the purpose of a down payment is a gift, and the gift letter will indicate and state that it is a gift and there's no repayment. So there's no payments I have to debt service into the application, hence why it's considered a gift. That's the portion that must be signed by the gifter.
Right, and whether they decide on their own to give the money back to their parent or grandparent, that's up to them.
It's supposed to be stated as a gift with no repayment.
There doesn't need to be a requirement to do so. Okay. So now that they sort of have the down payment all figured out and together, the next step is usually get pre-approved for a mortgage. So, what is necessary, and why do they want to get pre-approved, and the advantage of getting pre-approved?
Well, it's necessary because one, it gives you an idea what kind of homes you're looking at. What's the purchase price? What's the budget? So to go out there blindly and not know, and then in this kind of market, let's be honest, it's a seller's market. So to go in and have your heart set on a home, but not know if you qualify, you're setting yourself up for some disappointment if you actually don't. And so when we do a pre-approval, we take income information to confirm how much of a budget you can purchase. And then in increasing, not so much this climate, in increasing interest rate climate, we lock in a rate so that it protects the shoppers for 120 days. If rates go up, that rate is locked in. So the fact that for buyers, it'll give them a budget so that they can confidently go and write an offer on the property, know it's going to close, and then also a lock-in rate if necessary if rates are going up.
So it protects them against the potential of rates going up. But what happens if the rates go down?
Oh, even better. So if even though we lock in a pre-approval rate, we're allowed to, and that's pre-approval for purchases, right? I mean, as you're shopping, and let's say by the time you write an offer and rates are down, we will go and submit it at the current lower rate. And so, and even if the deal is still pending and hasn't closed, we'll continue to float that rate down as rates trend downwards, so that you'll get the lowest price and the interest rate before you take possession of your home.
As a date of possession, okay.
Mm-hmm.
Now, when, of course, I know that when we're negotiating for our buyers on properties, and being able to let the seller know that we're pre-approved makes our offer that much stronger. But now it's very common in today's market, which is very, very hot. It's a seller's market, and in many cases, we're finding ourselves in multiple offers. We're in bidding wars with other buyers trying to purchase the same property. And sometimes the seller will ask for a letter from the bank or mortgage broker confirming their pre-approval. Can you talk about that a little bit?
Correct. So, the pre-approval letter just states that the client has been screened and has done provided the documentation to the broker to confirm, the income and down payment, all the parts of the application for approval. So we've done the due diligence up front, and the seller, knowing the fact that this person has gone through that due diligence already, and it increases the success rate of it closing, as opposed to, let's say, it gets locked up, it's pending for a week or so, and then to come back and realize that no, the clients weren't qualified because they hadn't gone through that channel. So, and I've written many pre-approval letters, and my pre-approval process is I collect all the docs up front. So I'm looking at the documentation, doing the screening up front to make sure that we have everything that we need to be successful.
Okay, great. So, you mentioned a couple of times here about requirements, what the buyer would have to provide you, especially in docs, like we were talking about right now.
Mm-hmm.
Can you tell me about what will that buyer need to provide you to get that pre-approval?
Perfect. So yes, so income is the most important that we look at. So documentation that clients provide us is income confirmation. So if employees, typical documents I request up front is letter of employment, recent pay stub, some T4s to show some previous earnings, right? When you're self-employed, there's differences in paperwork requirement, but we collect all the income documents up front, and then the down payment component, right? So if you are withdrawing from any of your accounts, we need some history that it's accumulated. And anything gifted, right? The conversation is, hey, like your gifter, how much they're providing, when is that going to happen? So the documentation is typically income and down payment.
Okay. One thing we really haven't talked a lot about so far is a credit score. We always know that credit score is always important when you're looking at whether for a mortgage or a car loan or whatever it might be, any kind of lending. Your credit score is very, very important. Tell us about what kind of credit score they would need to be able to buy.
So ideally, what we consider like a credit, a good credit is 680 is the Beacon/FICO score that we're looking at. So anything 680 and up ranges as good, excellent credit. 620, 680 is where, there's challenges, and anything below it, it starts to, the lenders are, you have to kind of seek other options. So not only are we focused on the Beacon score, but focused on the history of why the score is what's the way that it is, because that's indicative of that client's like repayment history. And that's the weights that typically, that's one of the first things we look at, is that worthiness of repayments that you've done in that, like your car loans or your credit cards, to show that you've been responsible in repayment is how the lender is going to determine your, worthiness of, extending hundreds of thousands of dollars on a mortgage.
Mm-hmm. So, if we had a client, for instance, that had a lower credit score, than what would be needed. There are other options. You said alternate lending, I think you call it.
Yeah, we have, so as mortgage brokers, and so this is where I guess the strength of a mortgage broker over banker. So I mean, the banks have their purpose, and I send my clients to banks, right? But mortgage brokers have options where we're dealing with your traditional prime lending banks, but we also have, you know, I don't want to call it subprime, but alternative A lending options for clients who are, you know, have some challenged, bruised credit. And then we have privates. We have, you know, private institutions where there's been severe challenges in the past that, you know, that we need to, I guess there's options for. So brokers have options to all three levels of lending. And I can do all three of them, as opposed to, I know with bankers, sometimes they refer out, sometimes they don't have an option. So when you're dealing with a mortgage broker, having one application and access to all those options at once saves you time from having to, if you had some challenges, to, you know, to sit in front of different people and to kind of navigate that, you know, that journey.
Something we haven't talked about yet. If you are, for instance, self-employed, that might bring up some other challenges. Tell me a little bit about that.
Yeah, so self-employed clients, because you know, the income could be varied, right? You can have some strong years and lesser years and whatnot. So the requirement, you know, we look more into like the past of a, you know, couple years history, and self-employed income isn't very straightforward because you have write-offs, right? And so what your gross revenue versus what your taxable personal income is and how you can withdraw it, you know, and there's also your incorporated or your sole prop. There's lots of nuances. I think you can be much more creative, and I know the accountants are more creative with self-employed. So when it's self-employed, it's not that it can't be done. It's the fact that the documentation requirement is heavier. And so depending on what documentation can be provided will either determine whether you're in prime lending, you fit the prime lending guidelines, and if you don't, then there's Alt A guidelines are much more lenient for self-employed clients. And the private's always that space where it's like, it's a catch-all if the other ones don't work.
Yeah, so typically when you're talking about Alt A or private, I guess, am I correct to assume that typically we'd see slightly higher mortgage rates?
Absolutely. So when you're going, so almost like when I say prime, Alt A, and private, just imagine they're in tiers. So prime being, you know, the more ideal, right? You have to have, you know, strong credit, you know, provable income. And so when you're in that category, rates are the best rates in the market. They're the ones you see advertised, and they're competing, lots of competition in that space. And then when Alt A and private, so when there's more leniency on guidelines, then the lender charges a premium on the interest rate because of the risk that's, you know, that's associated with these types of files. So as you go down, you know, the grade of prime, Alt A, and private, the interest rate increases. And then when you're dealing with Alt A and private, there's also fees associated with it as well. So
there could be
yeah,
additional fees for that. Okay.
absolutely.
Something actually I don't think we really touched on very much to date, and maybe we should have talked about it a little earlier. Let's talk about down payment requirements. How much down payment is needed for first-time buyer or any buyer?
Okay, so first-time home buyer, it's really, it's not just the first-time home buyer. It's what's the purpose of the property, right? So we'll start with that. So if it's for primary residence, right, it's 5% down. If you can qualify on the prime side, right? So 5% down. And so, but if it's an investment property on the prime side, right, the bank side, A side, it's a minimum 20% down for rental properties because they're seen as more riskier. You move down to the Alt A lending space. The minimum down payment on that on a purchase is 20%. And then you go down to private, and the private could, like, the, you know, minimum 20% down for 80%. But then they could definitely scale back that you know, that loan to value. So they may require a bigger down payment depending on the risk of the file, right? So the client's worthiness determines, I guess, on, you know, how much the down payment and what the interest rate is going to be charged.
Okay.
So typically, so when we speak, I think we speak mainly and we talk about like in what you see advertised on the internet, most of the information will be based on prime lending space. And so 5% down, first time home buyers, owner occupied property, and then, yeah, and then, 20% down minimum for either Alt-A or private.
Okay. Um, Another question that I often get from first-time home buyers, they go, "Oh, we heard that there's a program out there where the government will match between 5 and 10% of my down payment. Is that program still available?"
No, that incentive. So we've had that incentive program, but unfortunately, it wasn't very popular. It
Mhm.
wasn't a very popular program, and that ended last year. So it was it was depending on the property, like the matching of the down payment. And we're seeing those incentives because those incentives from the government, it's almost like a share that they're going to, it's registered against title, and the repayment is based on a percentage share of the value of the home, right? So, but that's no longer available at this time. But there are people who have that incentive as a part of their purchase, and it's registered on their title.
Right. Okay. Awesome. Was there anything else that maybe we haven't discussed that you think those first-time home buyers should know?
Let me see here. I think I have my own notes on all of this. But yeah, so the thing is just, yeah, most importantly, like mortgage brokers have more options. You're dealing with one person, and because of that, I think there's an advantage to talking to a mortgage broker, and for that, and also the interest rates as well. We are more competitive. We have banks always competing for market share, so it opens up when you have competition, lower interest rates. And a pre-approval necessary in this kind of market. You should never go shopping. I think anyone and everyone in the industry can agree that before you go, spend time, doing some, I guess, viewing homes, you want to make sure that you know what your budget is. And as a part of the pre-approval is, we give you a budget, but we get to also give you the payment on what that mortgage is gonna be, so that you can plan for your home ownership and what that looks like for your household finances, and if it's something that fits your quality of life, so everyone's style of living and what you value. Some people go on vacations, so having an understanding of what that payment's going to look like going forward when you own a home helps you at least plan your home ownership future.
Okay, great. We have Jason here who just sent us a message. He said, "Should I wait for rates to get better or drop?" What are your thoughts on that? And I'll share mine.
Oh, well, let's be honest. Rates are trending downwards, which is great, right? It is great. And it has been trending down slowly. We've seen some half basis points, but it's the last one was 0.25%, right? So they are trending downwards. But when we're looking at the Alberta or Edmonton, Calgary market and home prices and the demand on these homes and the shortage, if you're looking at what you're waiting to save money and on the interest rate part of it, but yet homes are flying off the shelf, you kind of have to make that trade-off to make the decision that, do you know what I mean? Is how much you're saving by waiting going to offset the cost of what the housing prices are going to be? So
I
that's
totally,
more of a realtor, isn't it?
I totally agree,
Question.
because at the rate of which valuations are rising right now, you would not recoup that any savings you might have by a slightly lower interest rate. And based on all the economists that I've listened to over the last,
Mhm.
since the beginning of the year, I think everybody's kind of saying we might see it at the most from this point forward, I guess another 25, 50 on the outside, 50%, another 0.5%. So really, the amount that might save you on a mortgage payment, it'll be
Mhm.
obliterated by having to pay higher for that same home.
It's a frenzy out there. And I remember doing a video last year and like summer last year and saying, like, I know the economists or, analysts were saying it's going to come down, like just, what goes up must come down. But when we were looking at housing prices and the immigration trends, like buying last year would have been more ideal, because let's be honest, like I am seeing valuations, everyone's getting their city assessment right now, and they have gone up in the last year significantly. And that amount has actually the increase is more than what we've saved on the interest coming down. So in like just the last year, we've seen that.
Yeah, without a doubt, I'm expecting valuations to continue to rise
Mhm.
also this year and going into the next year, because for sure, unless something is unforeseen, the Alberta's economy is due to be strong at least for the next couple of years and even possibly longer.
Mhm.
Well, I don't know, Cheetah. You've been my go-to broker for many, many years, probably longer than both of us would like to admit, right?
Okay.
You, as I mentioned, I've been with working with you for again many years. She's an incredible mortgage broker that can help you through that process of securing a mortgage and help you through your next chapter in your lives. Um, Cheetah, can you tell us how someone can contact you to get a pre-approval? Or the other thing is that I actually was going to bring that up earlier and I forgot. If you're thinking about buying a home, you're wanting to get pre-approved, and what's holding you back is you go, oh, my credit score is too low. Can they contact you for some guidance on what they can do to improve their credit and possibly improve it faster?
Yes, I love that. Coaching. Coaching is a part of being a mortgage broker so that you're helping clients set themselves up for success. I've had clients where it's been 2 years since we've known each other. They've reached out a couple of years ago. There's been things they had to work on, and finally, after my coaching and their discussion, and then them following the steps that's been laid out for them, now are homeowners. So definitely, if it's a concern of like, hey, I know my credit's bad, but that's the thing is, if you want to be a homeowner, the value of a mortgage broker is to help you kind of look at where you need to improve so that you are successful. We can tell exactly what we need to see, and then will set out a plan, and then you can work on that plan, and then we can, circle back to getting you qualified when you have everything in order.
Yeah, so you can help them get into homes.
Absolutely. And I think I really enjoy working with self-employed people early on too, just because the paperwork requirement for self-employed requires a little more, I guess, guidance of what needs to be, on the tax return and whatnot. So that it's not, it's a proactive approach as opposed to, trying to mitigate it afterwards, right? So I will always would love to talk to clients well beforehand. And sometimes it's great where I've known clients for years before the journey kind of gets them to be successful. I think that's a part of like the value that I bring.
Okay. Again, like I was asking, what's the best way for someone to contact you?
Yes. So phone number, call, text, email, and the Gen Zers slide into my DM. Like I'm on all the platforms from Facebook to Instagram. And so I'm checking them. Email and phone call is the fastest. I don't often check my DMs. But yes, send a text or an email, call.
And can you maybe provide your email?
Yes. So Cheetah is spelled CHITA at EDM. So that's the first 3 letters of Edmonton -mortgage, MORTGAGE.ca.
Great. Okay. Well, hey, if you think you're getting pre-approval, talk to Cheetah. And when you're ready to buy a home, make sure you call me at 780-995-6520. Other than that, thank you very much, Cheetah. And hopefully we'll see you again soon. Take care, and everybody have a great day.
Thank you.
Bye.
Bye.